Imagine having a money-making machine in your home. You put money in, and over time, it reliably gives you more money back. For centuries, the wealthiest people in the world have had access to exactly this kind of machine. But here's the thing, this machine isn't locked in some billionaire's vault. It's available to everyone, including you. What's up, everyone? Today, we're breaking down how the stock market actually works. In plain English, without the confusing jargon that makes most people's eyes glaze over. If you ever felt like understanding the stock market is like trying to read hieroglyphics while riding a roller coaster blindfolded, this video is specifically for you. By the end of these next 10 minutes, you'll understand exactly how the stock market functions, why it exists in the first place, and most importantly, how regular 9-to-5 workers like us can use it to build wealth over time. This isn't just theoretical knowledge, it's the foundation that could literally change your financial future. So let's dive in. The stock market wasn't invented by Wall Street suits. It actually started in the 1600s when the Dutch East India Company needed money to fund their global trading voyages. Instead of taking all the risks themselves, they came up with a brilliant idea. Let regular citizens invest in their voyages in exchange for a share of the profits. Essentially, they split their company into small pieces that people could buy. This solved two problems at once. The company got the money they needed for bigger expeditions. Regular people got a chance to profit from successful trade voyages without needing to own an entire ship. Fast forward to today, and the fundamental concept remains exactly the same. When you buy a stock, you're not just buying a digital ticker symbol. You're buying an actual piece of a real company. It's like buying a slice of pizza instead of the whole pie, except this pizza might get bigger over time, and nobody will judge you if you own pieces of hundreds of different pizzas. So how does a company actually get on the stock market in the first place? Let's say there's a company called Morning Brew Coffee that's been growing rapidly. They want to expand to 500 new locations, but they need $50 million to do it. They have a few options. Take out loans and pay interest, find private investors and give up control, go public, sell shares on the stock market. If they choose to go public, here's what happens. They hire investment banks to help them through the process, like Goldman Sachs or Morgan Stanley. These banks determine how much the company is worth and how many shares to create. The company files paperwork with government regulators. They set an initial price for their stock. On IPO day, those shares become available on the stock exchange like the New York Stock Exchange or NASDAQ. Once public, anyone, including you, can buy shares of Morning Brew Coffee. If they use that $50 million well and open those 500 new locations, the company becomes more valuable, and your shares might be worth more too. Going public is like a company posting its relationship status on Facebook. Suddenly, everyone can see all its business, comment on every decision, and the pressure to look good each quarter becomes intense. Now, for the million-dollar question, what makes stock prices go up and down? At its core, it's simply supply and demand, like any market. Think of the stock market as a giant auction house. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. But what influences this supply and demand? There are several key factors, like company performance, growing profits. Stocks usually go up. Losing money, stock usually goes down. Beating expectations, big stock moves. Missing expectations, often big drops. External factors, interest rates means lower rates equals stocks become more attractive. Economic conditions means stronger economy, means stronger stocks. Industry trends. Think how streaming affected Netflix versus Blockbuster. Global events, pandemics, wars, etc. Human psychology. There's going to be fear, can cause panic selling, greed, that can cause bubbles, herd mentality, following what others are doing. The stock market is the only place where when things go on sale, people run out of the store screaming. And when price gets ridiculously expensive, everyone rushes to buy more. So how do regular 9-to-5 workers actually get involved in the stock market? First, you need an investment account. You have several options. 401k retirement account. Often through your employers, these have tax advantages but restrictions on withdrawals. Individual brokerage accounts, platforms like Fidelity, Charles Schwab, Robinhood, where you can buy and sell stocks directly. Robo-advisors, services like Betterment or Wealthfront that automatically invest for you based on your goals. Once you have an account, you have several ways to invest. Individual stocks, buying shares in specific companies, higher potential reward, but also higher risk. Requires more research and monitoring. ETFs, mutual funds, baskets of many stocks in one purchase. Instant diversification, not all eggs in one basket. Can track entire market sectors or strategy. Lower maintenance, often lower risk. Picking individual stocks is like trying to find a needle in a haystack. Buying index funds is like saying, I'll just buy the whole haystack, needle included. One of the most powerful strategies for regular investors is called dollar cost averaging. Investing is a fixed amount regularly, regardless of market conditions. This removes the stress of trying to time the market perfectly. Now that you have your brokerage account, you need the right tools to research potential investments. Here are the essential resources I personally use and recommend in 2025. First and most important is marketdash.io, my absolute favorite tool for research and analysis. This platform has completely changed how I evaluate stocks and is perfect for busy 9-to-5 workers. Here's why I love it. It gives you professional level data without the professional level complexity. The portfolio analysis tool shows you risk you might be missing. They offer a free tier that's perfect for beginners, and their premium feature starts at just $35 a month, which pays for itself with just one good investment decision. For market news, the CNBC app provides real-time updates on market movements, earning reports, and economic data. In 2025, they've added personalized alerts that notify you about news affecting your specific holdings. Just remember that financial news is designed to keep you watching, not to make you rich. Half the breaking news alerts are about as important to your investment as what your neighbor had for breakfast. You've chosen your philosophy, opened your account, and now have your research tools. Let's move on to the exciting part, making your first investment. Here's a quick look at how I use marketdash.io to evaluate my first investment. Let's say I'm interested in buying Apple stock. I can quickly pull up valuation metrics to see if it's reasonably priced, growth trends to spot momentum or slowdowns, risk factors that might affect my decision, analyst opinions summarized in seconds. What I love about MarketDash is how it simplifies complex data for beginners while providing enough depth for more experienced investors. It's like having a financial advisor in your pocket, but without the high fees. When buying a stock, you'll need to choose an order type. The two main types for beginners are market order, buys the stock immediately at the current price. Limit order sets a maximum price you're willing to pay. For your first purchase, I recommend a limit order. This ensures you don't pay more than you intended if the price suddenly spikes. Next, you need to decide how much to invest. Here's my rule of thumb. Start with a smaller position, about half of what you ultimately want to invest. Save the other half to buy more if the price drops. The stock market has created more wealth for average people than almost any other vehicle in history. And in 2025, with tools like marketdash.io, making investing more accessible than ever, there's never been a better time to get started. Remember these key principles. Choose an investment approach that fits your lifestyle. Set up the right accounts and research tools. Start with quality companies or broad market ETFs. Think long-term and avoid emotional decisions. Use technology to your advantage, but don't overcomplicate things. I partnered with marketdash.io to give the viewers a special offer. Use code FIRSTMONTH for a full free month off the premium plan. This gives you access to all their advanced features. If you found this valuable, please hit that like button and subscribe for more straightforward financial content. Drop a comment below with any questions you have about the stock market or which tools you're using for your research. Thank you for watching, and I'll see you in the next one.